This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, April 22nd, 2015. Euro dollar. So there's no point on making any moves in the euro right now with the market locked within a consolidation over the past several sessions. It's really a wait and see period with the market consolidating between 110.53, the high that we saw back on the 26th of March, and the low, the 12-year low at 104.62 from March 13th. Though the market does remain locked within a very well-defined downtrend, at current levels in the middle of the range, we need to wait and see a break on either end for clear directional bias. A break back above 10.53 would open the door for a more significant correction and force a bit of a shift in the structure, while inability to close above 10.53 or break above 10.53 will keep the immediate pressure on the downside for a retest and break below 104.62 and towards parity. But again, right now we're locked in the middle of the range, and it's best to wait back and see how things play out. Sterling dollar. So cable has enjoyed a nice recovery out from those multi-year lows at 145.65 several days back, though the market has rallied up into some stiff resistance ahead of 151.65. The market will need to take out 151.65, that resistance that we saw back from the 18th of March, to force a bit of a shift in the structure, while inability to do so will keep the pressure on the downside for a retest and break below 145.65. At this point, again, it's a bit of a wait and see to see which way the market breaks. Dollar yen. So dollar yen continues to be very well supported on dips down into the 118s, though the market hasn't really done a good job of going anywhere to the upside. Overall, the uptrend remains firmly intact here, with a break above 122.03 sought in favor of the fresh upside extension towards the 125 to 130 area further up. But again, the market really isn't doing anything right now and hasn't moved significantly in either direction, and it's a bit of a wait and see here as well. Ultimately, though, a break below 115.55 would be required to negate or compromise the highly constructive outlook for dollar yen. Euro Swiss. So Euro Swiss closed just at 102.50 on Tuesday, and the market will need to break and close below 102.50 to open the door for the next major downside extension towards parity. However, given the down move that we've seen off that 108.15 recovery peak back in February, it looks like the market is now a little bit stretched and could be poised for a bullish reversal in the sessions ahead. A contraction in range has also indicating, or is also warning of a breakout, and again, given the move that we've seen over the past several weeks since February, that breakout could be to the upside given the stretched technicals. At this point, a push back above the high that we saw on the 17th of April around 103.30 would be required at a minimum to alleviate the immediate downside pressure. Aussie dollar. So Aussie remains locked within a well-defined downtrend, but has deferred to a period of consolidation over the past several weeks. The market right now should ultimately remain well capped below 79.38, while a break back below 75.33, the recent multi-year low, would open the next major downside extension. However, the market has been very well supported in recent short-term trade, though any rallies here should be very well capped ahead of 79. Dollar CAD. So dollar CAD has recently broken down below some key multi-day range support at 123.50, though the market and the setbacks have been very well supported now ahead of 120 at 120.88. The market will now look to put in a higher low ahead of the next major upside extension above 28.35 and towards the 2009 peak at 130.65 further up. At this point, even if we do see additional setbacks, they should be limited to the 119 area from where that higher low is sought out in favor of a medium term higher low is sought out in favor of the next major upside extension. Really, only a close below 119 would compromise the constructive outlook for dollar CAD. Kiwi dollar. So although Kiwi has been seeing a nice recovery off that 71.76 low that we saw back on the 3rd of February, the market does remain locked within a well-defined downtrend and will be looking to put in a medium-term lower top ahead of a bearish resumption. At this point, only a break back above 78.90 would compromise the immediate bearish outlook, though it wouldn't negate the outlook. SPX 500. So as much as the S&P 500 trades just off those record highs from February, any rallies over the past several weeks have been very well capped above 2100, with the market showing signs of wanting to put in a major top. A major top confirmation will be given on a break back below key critical support at 2040, the low that we saw on the 12th of March, and this will open the door for an acceleration back below 2000. But inability to take out 2040 will, however, keep the more immediate pressure on the top side, and we can't rule out a possibility for a break above that 2120 high and potentially opening the door for a move up towards 2200 further up. Gold. So gold hasn't done much over the past several sessions, though the market is consolidating over that recent 1178 low. The consolidation does suggest that we could be seeing a bullish consolidation in favor of a higher low at 1178 and fresh upside extension above 1224 and towards the 1300 area further up. At this point, only a break back below 1178 would compromise the current recovery outlook and basing outlook in favor of potential retest of that 2014 base at 1131. But again, for now, while we're above 1178, the structure is constructive and the bias is constructive for a push back above 1224 and towards 1300 further up.